end of this. Okay, recording active. I'm Catalina. I am here with Brian, who just took himself off camera. He's having some audio and video issues. I am the co-founder of LoanSense, and today we will be talking about, well, I'd like to ask people to turn off their devices and to be distraction free for about 30 minutes. That is a maximum we will take here. And the intention is really to give you the tools and resources to provide A+++ service to your clients. And so it'll be pretty quick. There's a call to action. We're going to talk about the value to mortgage originators, why student loan assistance is so vital, how we help you and your customer, and what is the next steps to sign up for this call to action, which is your own landing page to refer people. Hello to all the people joining us. Hi, I'm Catalina. This is our agenda. And we will have a call to action literally at the end. It takes 3 minutes to complete for you to have your own landing page. We're taking landing page signups for the next 48 hours just because we can honor the rollout of those of people that sign up within the next 48 hours. So really briefly, I'm Catalina, the founder of LoanSense. We are student loan experts, but we have pretty in-depth knowledge as well of credit policies on how to help student loan borrowers so they can actually close on a mortgage, right? We never thought that getting continuing education could hurt your chances of getting a mortgage, even if you're highly paid. And we want to make sure that's no longer a problem for your potential clients. So really quickly, who am I? How did I get into this? I do not have experience in the mortgage side of the industry. I actually come with a lot of higher education, finance, and policy expertise. I was a Gates-funded education policy fellow. I went to get my MBA, and this is where I concentrated on counseling hundreds and building a software to solve the problems that affect so many student loan borrowers, which is how do I handle this debt when I graduate so that I can achieve the other goals of wealth building, right? So LoanSense is literally now a service that powers other financial services, tools, and products to help student loan borrowers achieve that next step of wealth building. In your guys' case, it's home ownership, right? So what is the value to the mortgage originator? So we hear all the time from people we serve, right? Which is, look, I went to Quicken Loans, they turned me down. And that makes me really sad because they could be even earning six figures, but they have so much student loan debt, right? So this is an opportunity for you all to serve those that are being turned down by large mortgage originators. Second of all, it can accelerate the rate of close because your customer doesn't have to wonder, what should I be doing? What paperwork should I fill out? And instead of you just saying, hey, call your servicer, now you have an entity, which is LoanSense, to point them to, so we can help get them their student loans in order quicker and therefore help you close quicker because they're not fumbling around wondering what they should be doing. Of course, we provide A+ service and it's no extra work to you. You just refer them. When we're done, guess what? We give them right back to you. When we're done serving them and they're just ready to have that letter to go to underwriting, you will be informed and be able to take the customer right back to you, okay? Why is student loan assistance so vital? It's so vital because 60% of first-time home buyers have student loan debt, okay? It's not a small problem, it's a gigantic problem. So 45 million Americans hold 1.7 trillion in debt. It's the second largest debt behind mortgage debt, actually. And so 1/3 of all student loan borrowers are in their 30s, which is the prime time when people consider buying a house, right? Not to mention, I'm going to have to mute Brian. You can hear me now, right? Okay, so a third of those in their 30s. Do people hear me echoing? I might have to mute him. So let me mute him so I don't echo. Oh, if anybody else unmuted themselves, that's what's causing the echo. Oh no. Okay. If you want to speak, you're welcome to unmute yourself. How does that sound? Okay. So that's what I wanted to talk about first. So a third of all 30-year-olds hold 1/3 of student loan debt, but now there's this growing trend. Okay. And this growing trend is that 8 million Americans above the age of 50 now are borrowing actually 20,000 more than their children to finance their education in the form of Parent Plus loans. So even the individuals now downsizing their house, downsizing their house and want to take on a mortgage, if they want to take on a mortgage, are also affected by student loan debt. So I wanted to point that out as well. It's not just the 30-year-old or the 20-year-old. But now, obviously, the 40s, 50s, people who are becoming parents and borrowing for their children. Who is LoanSense best for, and who do we best serve? We serve those that have a low amount of debt but never got a degree. And we also serve those that got a lot of education but don't earn that much money, like the social workers, the teachers. Actually, the majority, I would say, of middle income Americans, especially in the healthcare profession, took on quite a bit of debt to get that education, and they don't earn like doctor salaries. So these are individuals that are primed for LoanSense to serve because they're primed to get student loan reduction, okay? And this is super, super important in the mortgage industry right now because well, we have an unprecedented amount. This is from housing data from Fred, of course, but the Mortgage Bankers Association, says applications are up 21% this year. We're at the largest market growth rate when it comes to first-time home buyers and those entering the market right now, and people downsizing. So it's the highest we've ever been in the United States history from 2020 to 2024. Okay, so first-time home buyers really thinking about buying a house. So we're at a prime time of first-time home buyers at the same time as the highest amount of student loan debt per capita in our history. So it's kind of like this colliding space in place, and that's where we serve people best. So how do we serve you and your clients? And who do we serve best? I want to go in again. So we serve, by the way, I will have plenty of time at the end for Q&A, so you can ask follow-up questions about who we serve best, follow-up questions of how it affects mortgage credit policy, and how we can help your customers manage their student loan better so that they can close on a house sooner, right? So number one, we serve best public servants who, by the way, can get $0 counted towards their debt to income ratio under Freddie guidelines. And 90% of these people are not filing their paperwork properly into the Public Service Loan Forgiveness Program, and this is where LoanSense helps. So if you have an individual that comes to you and says, I work for a hospital, I work for a school system, I work for the government, I work for the university system, I work for anything that's defined as a 501c3 or government entity, and they potentially, under Freddie guidelines, qualify for $0 to count towards their debt to income ratio, okay? And LoanSense can help them file all that appropriate paperwork to enroll in those plans properly so they can actually get $0 counted towards their debt to income ratio, okay? So that's a huge, huge part of the value we can provide. The second thing is a client who has good credit, but they need to lower their debt to income ratio, because if you do the 1% rule by FHA, their debt to income is too high to qualify for a mortgage or to qualify for any significant amount of mortgage, okay? That's second of all who we serve best. And third, who we serve best are non-traditional students. People have gone back to school and now are enrolled full-time in school, but they need to be kicked into repayment in order to qualify for a mortgage. These are people we serve best, okay? So I want to give a little bit of guidelines on Freddie and Fannie, and then I'm going to go into like call to action straight away and make this as actionable and as quick as possible. So Freddie Mac, right? Freddie Mac guidelines allow public servants to use $0 towards debt to income, okay, in order to qualify for a mortgage. If they're in deferment or forbearance, Freddie guidelines will allow them to count 1.5% of the principal balance towards their debt to income. With Fannie guidelines, Fannie conventional guidelines allows for people just on income-driven plans, so people that need to lower their payment get that lower payment counted towards their debt to income ratio. And of course, I put FHA at the bottom because that uses the 1% principal guideline in underwriting, right? So let me pause here. Are there any questions about like who we serve best and some of these guidelines right here? Because not only do we help them enroll properly, we liaise all the way with their HR to get the right paperwork signed if they're a public servant. Then we have a deep enough understanding of credit policy to understand, based on the borrower and who they are, what the best credit policy is for them. And then ultimately, once we're done serving them, when you sign up for a landing page, we send them right back to you when they're ready, right? Mortgage ready, basically. And so you can help them immediately without any guessing what they should be doing with their student loans. Sign up. So let me pause before I go on to how to sign up. Are there any specific questions about these rules or these guidelines? You can type it, you can unmute yourself, you can ask questions however you'd like. Man, Brian makes me feel like I'm not being heard. I'm hoping if I can't be heard, people would let me know, right?
I can hear you.
Okay, good. Okay, you finally can hear me. I'm glad. Are there any questions? I could go straight to the call to action. I promised Brian I'd make this super short. I'll definitely stay on to even redo it for late joiners or whatever people need us to do. Okay, so let me start this call to action. So it's very simple. This is it. It's super, super simple. You have a landing page, right? You will get your own landing page. We're going to have a form for you to fill out. If your client does not know what service to buy, just recommend the $3.99, especially if they're a public servant. We will help them. We will help get them on the right plan for their situation. We will enroll them and we will send them back to you, and we will help liaise this process for $3.99. They can even pay us over 6 months if finances is an issue. And when we're done serving them, you will get an email. Ding, thanks for serving us. And it takes 2 to 6 weeks depending on what their loan situation is. Like if they're in school, it's going to take longer. Okay, so here is a really, really quick example of like a landing page. Oh, wait, I click on it, but it's not being shown, right? So let me just let me just share this landing page real quick. Screen share. Okay, so here's an example of a landing page, right? So you're going to go and we talk about all the different things we help people with. And then if they don't know what they need to be buying, if they need less of a service, we can always refund them partial, but we would just recommend this. They sign up with an email and they basically get a slot to speak to someone, and we help them liaise the paperwork. If they're not sure, they can also do a free assessment where they can just run their loan information and see if we can be helpful. So that's just a really quick overview. It's super simple. They answer 5 questions, upload their loans, and they get this free analysis, okay? So I just wanted to show that really, really quickly. I don't want to turn this into a demo necessarily. I just want to show you with the landing page how easy it is to get people to sign up. I hope that was like, you get a landing page, you tell them to go to the description of services, okay? So basically, I'm going to summarize, and then I'm going to give you guys the call to action, which is, look, the Quicken Loans of the world are turning student loan holders away because they don't know how to deal with their loans. And this is really an opportunity for you to expand market access, services, and even get referred and the rate of close without increasing your workload. You send them to LoanSense, and then we will send them right back to you when we are done. So now here's the call to action. I will make sure to push it. By the way, the call to action will also be available when you sign out. So the call to action, it's right here. It's a form. You have 48 hours. Please fill it out. It literally takes 3 minutes. You essentially fill in a little bit of information, provide us your logo, who are the key contact people that want the information of your clients back, to you once we're done serving them and helping them close on their loans. And then, of course, if you have any questions, our email is at the bottom here, info@myloansense.com. If you have specific questions for specific people you are working with, we're happy to answer them if they're unsure if we can help. But 60% of people should be on income-driven and subsidized plans by the government and are not in them. So the likelihood that they should get help is high if they have high student loan debt and want to close on a house. So with that being said, let me open up for questions now because I want to make sure to answer your questions. Any questions? You can chat them, you can unmute yourself, whatever you feel most comfortable doing. If not, please fill out the call to action, and we can't wait to welcome you to the LoanSense network of partners that we are so eager to work with and serve your clients. Brian, do you think there's anything I missed that you think requires more clarity?
No, I think you covered it well.
Okay, great. And I made it super swift too, right?
You sure did.
Wow, I have no questions. That must mean I did an A++ job. So, yep.
Are you going to, you recorded this, are you going to share it after the webinar?
Yep, I can share it. I can certainly share it. And also, Brian, you're welcome to share it to your network of, you're welcome to share it. You know what I mean? We can share it out. So yeah, absolutely. I'm recording it. Yep. All right. Oh, we have a question being typed here. I'm happy to answer anything on who we best serve, or even the mortgage credit policy and how it affects student loan borrowers and how we can better help them. We hear all the time of people who go to mortgage brokers who are like, they're trying to qualify me for FHA and my 1% is too high. And so there's all kinds of things we can do to help people to get them in a better loan plan and then give a little guidance on what credit policy would better help them. I know not all the time do they qualify based on other factors, but someone working at a hospital can get approved for IBR even though they're making good income. That is true. So income-driven repayment plans, IBR specifically, is one type of income-driven plan, okay? So even if they're making good money, if they're a public servant, they should still, and working for a hospital, if it's a nonprofit, is most likely categorized as a public servant. So they should still do a loan analysis and see if they can reduce their payment, and they can still go onto an income-driven repayment plan that does not have a hardship requirement, such as revised pay as you earn. But if they cannot, let's say, for example, and they could be advantaged by something else like an extended fix to temporarily lower their payment so they can qualify for more mortgage, we can help them with that as well. But at LoanSense, we're really good at helping people create short-term loan plans so they can close on a house, and then can help them think about how to readjust for their long-term financial planning as well in terms of their student loans, okay? So we can help enroll people, we can help advocate with their servicer, we can do all the steps required to better manage their loans. But that is true. If they're at a hospital system, even if they make good money, there are things they can do with their loans to help reduce that monthly payment and close on more house. I hope that's helpful. Anything else? There are some other options like extended fix. We tend to tell public servants to stay away from refinance, but for those already in the private market who have already refinanced, for example, then they can go on to a longer refinance period for their student loan, so it reduces their payment, and that can also allow them to get more house, or get a house at all, but more house. So I hope those are, so we're full of strategies, whether they're public or private loans, to help people be able to close on a house. Longer than 25 years. What does that mean? I'm sorry, the student loan payment, or what do you mean by longer than 25 years? No. So if they're a public servant, their loan payback period is only 10 years. So everything that they owe after the 10-year mark is forgiven by the government if they file their paperwork properly. And that's where LoanSense comes in. We make sure public servants, if they work at a hospital, are filing the right paperwork to get their loans forgiven after 10 years. And that's the number one error people do, is they don't file the right paperwork. And it turns out they've worked years at a hospital and then realize, oh my goodness, I was supposed to get this. I was supposed to pay for 3 more years, but none of my payments qualify. So we help refile and get people's back payments counted. So I hope that helps. Like, public servants should only be paying their loans for 10 years. They should not be paying for more than 10 years. They work in the private sector, then that's where they can get into longer payment terms. Anything else? If you want to unmute yourself and speak, you're welcome to as well. Otherwise, I just hear myself speak, which is fine too.
Can you hear me?
Yes, I can hear you. Hello.
Okay.
Are you Terry, or do you go by DC?
I go by DC. Hey, Brian.
Hi, DC.
Hey, is it Catalina? Did I say
Yes,
that right?
that's me.
Okay, so my question was more so when you said longer than 25 years in regards to the extended plan. Is that, I'm just trying to
Extended
make sure.
plans, yeah, extended. Okay, so extended plans are 25 years.
Okay.
However, if someone works for a hospital system, we want to try to avoid getting them onto an extended plan. It would be much better with their student loan to get them into an income-driven plan and then file the right paperwork to get their loans forgiven after 10 years. But the reason why I tell you that is because, and the reason why that's also really important on the mortgage side, is because they're advantaged by being a public servant. And I want to share this with you. How they're advantaged by this is because if they're considered a public servant and file the right paperwork, then they get $0 counted towards their debt to income ratio with Freddie Mac conventional guidelines. So that's why we don't really want them to go on extended. We want them to go on income driven and file their paperwork properly to be considered a public servant. There was guideline changes in January for Freddie Mac guidelines. So we want to make sure that people get the full advantage of that and qualify for more house. Does that make sense?
It does. I'm familiar with them, the $0 counted towards the DTI. But I guess the thing that stuck out to me, I wasn't sure if you meant that that you could get their, lower that payment by extending it more than 25 years or what, and you answered that question. So my next question is in regards to they should only be making paying on it for 10 years. So with someone who's actually been making the payments, I'm assuming this does not qualify for those who are on the income driven.
This
plan?
does. So
the
income driven plan is actually overseen by in the Fannie guidelines. If they're just on an income-driven plan and they're not a public servant, because you can be on an income-driven plan and be a private sector employee, then you don't get 10 years, you get 20 years,
okay.
20 to 25 years, but you could still be on an income-driven plan. And what Fannie rules say is, let's say your income, based on your income, the government says you only have to pay $50. Well, based on the Fannie guidelines for conventional, then $50 counts to their debt to income ratio. And by the way, LoanSense can still help them file the right paperwork to make sure that they're getting those payments qualified towards the forgiveness, as well as help them understand the tax obligation if they're a private sector employee. So we just basically go above and beyond what you all do. But
they have to have been making more than, because some of their plans where they've been qualified for, they're at that $0. So they have to have been paying something for the last 10 years in order to qualify for this, right?
They need to pay $1.
Okay. All right.
So their payment has to only be $1. So what happens is, if their payment is $0, then Fannie counts it as if their payment's $1 in deferment or forbearance, it gets counted as 0.5% of the principal DTI. Does that make sense?
It does. I guess my mindset is I'm trying to move toward those that would probably benefit by with your services, that could just get it forgiven because they've been making the payments or making something for maybe 10 years. So that's where my mindset is, just trying to go see how we can maximize helping people.
Yeah. So just FYI, these are all the people we help the best. People that are public servants, obviously working for nonprofits, but also people that need to lower their payment but don't know what the best option is. A lot of people, when they don't know what the best option is and they just call up their servicer might put them on an extended plan or sometimes graduated plans, which are not good for people. Or they may just not know what their options are. So even if they're not a nonprofit or government employee, we can still help them figure out what the best plan is for them. And especially if they're about to get married or are married, this is where the income-driven repayment plans are complicated. And this is where we can help them make a decision. It's affected by how they file their income taxes. And that's beyond the mortgage space, by the way. But that's how we help people. So we help people with their loans so that even after you guys close, it's a good financial decision for them holistically, right? And then, of course, people who are enrolled in school and want to close on a mortgage. Those are people we traditionally can help well as well. Okay. Does that make sense?
It does make sense. Thank you.
Yep. Anybody else? Otherwise, I know I'm happy to be here to answer more questions, but I know I told people only 30 minutes. So if you got the information you need, we'd love for you to fill out our form, give you a landing page, and you can start referring your clients who may need assistance with student loans. And of course, our commitment is to get them the results, enrolling, and help them as best as we can. And there may be issues also because President Trump also extended $0 payments until the end of December. So if they need to get kicked into repayment to better benefit from this program, we can also assist with that. So like if they need to be kicked into repayment to get the advantage of Freddie and Fannie guidelines, because we have $0 payments until December, that's another thing LoanSense can assist with. Anything else? Oh, where's the landing page? Oh, I pushed a call to action. So if you missed that call to action, where is the landing page placed at? The landing page, that's a great question for you, Brian, but Pam, you can place the landing page wherever you would like. Do you want it linked to your website? Do you want it in your email? It's just a link. So you can place it wherever you'd like, but maybe Brian has a suggestion. Where would you suggest people place their landing page, Brian?
Well, for the folks that are signed up with FinLocker, we have a widget that we built out that would be inside the locker. Otherwise, I think on your website as a landing page could be a funnel that you have if you're asking questions on the website and you identify student loan debt. Otherwise, could be pushing out an email when you run across a consumer that could use the service.
Yeah, or also to add, just having the landing page handy in the event you notice on someone's credit pull or what they're telling you that they have student loan debt, because they can go on and use our preliminary tool for completely free, right? They don't have to pay for our service. It's only if they don't really know what to do, what's next, and they need help enrolling properly into public service loan forgiveness, which we see is the #1 error people commit. Then we have professional and expert filing services that can help them with that. So it's always useful if people have debt, period. Student loan debt, that is. Anything else? Any other questions?
I think you did a great job.
Thank you. So just to sum up real quick, if you have colleagues or people you think would like a landing page, or have any additional questions we didn't answer today, I'm just going to go to info here. Any inquiries? Our customer success team answers way quicker than I do, so I like to give out their info. It's info@myloansense.com. Please, when you end this webinar, you'll also get the form to fill out to get the landing page. If there's anything we could do to be of assistance and to help you better serve your clients in partnership with FinLocker, we are more than happy and excited to help you and answer any questions you may have. Yeah, thank you. I'm going to end the recording, but I'm going to stay for just a few more minutes in the event anybody has any burning questions.
And I'm going to